Greetings, everybody. Marcus here. It is February 18th. I just got back from Belize this weekend. Of course, a little bit too soon, it seems. It's minus 30 out today. Looking out my window, I see all of the steam from the buildings is headed north, so that hopefully means some warmer weather is coming from the south. And hopefully you're all staying warm too. Anyways, for those of you who are watching this on YouTube, this video pertains to my regular monthly e-newsletter, which you can subscribe to by going to my website at www.muhs.ca, scrolling to the bottom and subscribing on that form. I'll try to keep this month's video short. There's just one sort of thing I wanted to discuss. This comes from client conversations as well as some other stuff I've read. And first off, an apology. My industry and the talking heads on the financial noise networks have done everyone a disservice in making everyone believe in the investing public that geopolitical news is highly pertinent and important to your investment strategy. That we need to follow that we need to be glued to the TV, to the noise networks in order to be successful investors, or that we need an advisor to give us timely advice as to when to adjust our portfolios to adjust to changing narratives. I'm here to tell you that geopolitical noise is absolutely, positively, 100% irrelevant to your investment strategy. Lately, a lot of the questions have pertained to tariff noise. So obviously what's going on with Trump talking about tariffs against Canada, tariffs against steel and aluminum, and that seems to be dominating the news headlines. And of course, how it can potentially affect the Canadian economy. So keep in mind that we advisors, as well as all the talking heads on TV, economists, whatever they're spreading, whether they're spreading doom and gloom or whether they're prognosticating great things about the markets to come, none of us have the slightest clue as to what's going to happen. The future is unpredictable. And to believe that any of us can predict the future and to act on it can lead to peril to your portfolio. So I found an excellent example of this recently, just to give credit to where it's due. It's a short article from Dimensional Funds, which I'll also link in the newsletter, on what Chinese stocks did during Trump's first term when China was target numero uno for tariffs. So all that noise, again, it was probably recent enough that we remember it when Trump, during his election campaign in 2016 and in his early days of his administration back then, proclaimed China to be target numero uno, that there was unfair trade happening, et cetera, et cetera. Sounds very familiar. Around 2017, 2018, he upped tariffs to about 25% on all sorts of goods. And a trade war ensued as China also reacted by cutting their agricultural imports. And U.S. markets did actually plummet in the fall of 2018 when the rhetoric got fairly heated and it looked like there was no compromise happening or anything like that. And again, that was a process that was going on for at least a year, to the point where the markets finally said, well, you know, if global trade is so handicapped by this trade dispute, the markets, of course, reacted by going down almost 20% in the fall of 2018. That's the U.S. markets. Now, let's look and see what did the markets do over the full 4 years of his term. So I'm showing here a chart of two U.S.-based ETFs. One, the Vanguard Total Market, which is basically an index ETF of all U.S. stocks. And the other one, the MSCI All-Cap World Index ex-U.S. So that is the entire rest of the world, cap weighted minus the US. What we see over those 4 years, and this is just going from January 1st, 2017 to December 31st, 2020 to roughly encapsulate the 4-year term of Trump's first presidency, the markets had a pretty good return over those 4 years. The US did 16% annually, and the rest of the world, while obviously not as good, still did a pretty respectable almost 10%. Over that 4-year time period. Those are total returns. Just to take a break from talking about China for a second, this chart alone tells you why you shouldn't be reacting to the news, the noise that's going on, geopolitics, whatever else. If you did, imagine what that would have done to your investment returns. So again, 16% annually. And let's focus on the world, because I don't think anybody should be invested 100% just in U.S. stocks. But almost 10% annually, that is a nice return to have. That's not something I'd be upset about after 4 years. But how did you get it? You got it by staying invested for the full time period, not ever reacting to what is going on. And remember what was going on. We had at the beginning of this time period the trade war. This right here reflects the fall of 2018 to the basically Boxing Day, I think, was when things turned around. And then, of course, 2019 was a strong recovery. And it's pretty obvious here what happened here. This was the global pandemic. So if you think about it, trade wars, unpredictable president, there were probably some other things that happened too as well in this time period, and this global pandemic that brought everything to a screeching halt and actually threatens a Great Depression. And despite that all, and again, if you reacted to anything, you hurt your returns. But despite it all, you had a pretty decent return. But what about China? How do you think target numero uno did when their biggest export partner at the time was slapping tariffs on many of their goods, as well as China having to pivot to find new import options for agricultural goods, which are very vital, of course, to any economy. And all of this, you would think, would throw a wrench into the Chinese economy as well as into Chinese stocks. Well, there in red, naturally, is what the Chinese stock market did by ways of the iShares MSCI China ETF, so it shows us a return in US dollars. A return of 18.33% annually over that time period. And I have to reiterate again, that happened despite the trade war. So obviously you can see the effect it had on their markets. Despite a trade war, that had them in the crosshairs, and despite them also being at the heart of the pandemic and having to face much tighter lockdowns than any of us ever did. So again, I cannot stress this enough. If the nightly news is keeping you up, turn it off. If the financial noise networks are part of your cable package, here's an easy way for you to cut some costs. If you're a client of mine and you need to review your investment strategy, you know how to set up an appointment. The links are in the email, and we can review and see if your investments still align with your goals. Most importantly, review your financial plan, as that's what really matters. The investments are just a path to reaching your financial plan's goals. And if you're not a client and are in need of a review of your strategy, I'm more than happy to schedule a meeting with you using the Discover MWP link. That link allows me to get a little bit more information about you. I'll add that link as well into the YouTube description in case you're not yet a newsletter subscriber. Schedule a meeting, 30 minutes. There's really no obligation. I do a bunch of these meetings per month. I don't expect everyone to become a client, but I hope to provide a little bit of insight, maybe something you can use, maybe answer some basic questions. And of course, if you're not yet a newsletter subscriber, subscribe now. Again, a link will be in the YouTube description. What I really aim to provide you with this newsletter is good information that you can use as a Canadian investor, personal finance stuff, financial planning stuff, as well as actual useful information about investing, which does not mean this is what's going on in the news. There are no stock tips in my newsletters. And we don't really care what's going on in the news. What we care about is having a properly diversified portfolio, making sure it is reasonably low cost, and that we're following evidence as opposed to emotion. So again, that is it for this month. I probably went a bit longer than I originally expected, but I think this is some pertinent information you can use to help give you a reason why you should tune out the news. So long for now.